Hello and welcome back to the Coin Stories podcast. I'm your host, Natalie Brunell, and I'm talking to leading voices in Bitcoin and macroeconomics about their origin stories, Bitcoin headlines and news topics, and this movement to fix the world by fixing the money. This podcast does not provide financial advice. Before I share this week's episode, here are some messages from my sponsors who make this show possible. First of all, are you ready for Bitcoin 2023? I certainly am. This year's Bitcoin conference was absolutely amazing. I got to spend a week in Miami with tens of thousands of Bitcoiners from around the world, and I'm so grateful that I had the chance to anchor Bitcoin Magazine's live desk and MC the main stage. If you missed the event, you can catch all 3 days of incredible Bitcoin content over on Bitcoin Magazine's YouTube channel. And also, it's never too early to start making plans to attend the next conference. Bitcoin 2023 tickets are already available and super early bird rates do not last long. So you can visit b.tc/conference/2023 and secure your pass before prices increase. This show is also powered by OKCoin, my favorite place to DCA without the crazy fees. OKCoin recently launched an amazing initiative called Crypto for All, which is aimed at democratizing knowledge and access to Bitcoin. OKCoin is one of the fastest growing and most secure global cryptocurrency exchanges that serves all your needs for Bitcoin and is committed to investing in educational content, funding crypto developers and entrepreneurs from underrepresented groups, and helping more diverse talent work on crypto ecosystem projects and careers. OKCoin has actually contributed more than $1 million to Bitcoin core devs and counting, has one of the most active Lightning nodes, and recently launched Sats mode. To open an account and start stacking, head to okcoin.com/Natalie and get $50 in Bitcoin when you sign up. Well, Lyn, thank you so much for joining me. How are you liking Oslo?
Oh, it's amazing here.
It's your first time, right?
Yes.
How do you find the conference? This is a little bit different, I feel like, than some of the other ones we've been to, Bitcoin Miami. Doesn't just have Bitcoiners, right?
Yeah, I mean, it's mostly human rights, and it just the fact that Bitcoin's here is mostly focusing on a human rights angle, right? So how to help the people that are most needing of it, right? So a theme I've had is that basically, as useful as Bitcoin is to me in a developed country, it's kind of optional, at least at the current time. Whereas for a lot of people, it actually can change their life in ways that, for me, it's more like an investment or more like, an asset compared to other assets. Whereas for them, it's, having, cryptographic money, Bitcoin, censorship resistant value that they can change peer to peer, that they can move with them, that it's hard to, confiscate, that's hard to block in any way, changes everything.
Well, I saw your panel yesterday, you moderated, can Bitcoin reach 1 billion people? So I'm gonna throw that question to you. Can Bitcoin reach 1 billion people?
I think it can, especially with all the scaling methods, right? So there's Lightning, there's other scaling methods, and then some people use it custodially, right? So everyone kind of uses what specifically they're looking for with it. But I think the way it's designed, like any other financial system, it goes up in layers. And so each layer kind of preserves exactly what you want it to do. So there's like a settlement layer, then there's fast transaction layers, and then you can have things like more expressive layers, right? There's all sorts of things you can do with it. And so I think long run, there's no fundamental issue with scaling, although there are just hard programming challenges, and then also just, the cultural adoption as it grows.
You were one of the people that was kind of predicting volatility in choppy waters, especially when it comes to Bitcoin's price this year. Can you tell me a little bit about what you think of this recent sell-off and whether you think it's going to potentially go even lower?
So basically, historically, and the sample size is not big because we're talking about a 13-year-old asset, it doesn't do well in economic decelerating environments. And I had questions like, okay, would that pattern hold this time? Or because there's higher inflation, it's the first time you've gone through a down cycle that's inflationary in Bitcoin's history. And I was like, that's a new variable. So I was like, it's probably not gonna be great for price, but we'll see. And so far, it has been, pretty bad for price, obviously. And I started to get concerned when I saw Terra buying the Bitcoin. I was like, now I can envision a capitulation event forming. So I actually wrote about that. And so that kind of played out, unfortunately, as expected. It's kind of earlier than I thought. So I don't really have a high conviction if we're going lower or not. It's, it's not like Bitcoin necessarily bottoms as soon as the economic indicators bottom. It's not that correlated, right? So it could bottom ahead of time, it could not. I think we're already in kind of a value range, but that doesn't mean we can't go lower.
Can you tell people what you think the big takeaway is from the Terra meltdown?
One, that there are a lot of Ponzi schemes in the space, that basically there are things that are just based on first in, first out. that are just unsustainable. And a lot of projects are just based on these kind of artificial temporary incentives. So, you put kind of funds into a protocol that lets you pay out higher than market yields, but only lasts a temporary period of time. So it's kind of like bootstrapping. And that only works if you have actually a good product. Like if I have some sort of like, say, protein bar and it's new and it's great and I'm trying to sell it, I might do marketing to, have it reach critical mass, but then it has to become profitable and self-sustaining on its own. It has to actually be a good product. Whereas if I'm just trying to sell like air, if I'm trying to sell fraud, after my initial marketing runs out, there's nothing there. And that's what a lot of things look like in the crypto space. And I think people have to be very careful about what they go into, especially outside of Bitcoin. And I saw a lot of people say it. I think it's the best way to describe it. If you don't know where the source of yield is, you're the source of the yield. You're the exit liquidity if you can't find who else is.
I think this has sparked more conversation surrounding stablecoins, and certainly we might have some regulations sooner as the result of the Luna Terra situation. But can you offer your perspective on stablecoins? Because we've been hearing panels that talk about how in the developing world, people need access to the dollar, and stablecoins really have been the answer. So what are your thoughts on stablecoins? And specifically, Luna was an algorithmic stablecoin. So is there any difference in terms of whether you think one or the other is better?
But yeah, there's a major difference. Algorithmic stablecoins have been fraught with failure. This is not the first one that blew up. This is the biggest one, but there's been multiple blowups for algorithmic stablecoins. So it's just inherently an unstable design. Whereas fiat collateralized stablecoins, they have risks. I mean, they're centralized. You have to trust that them and their accounting firm are auditing it properly. But for a lot of people, if you're in say Lebanon or Argentina, if you store dollars in the bank, they can be forcibly converted into local currency, so you can lose your protection there. So in many cases, trusting an outside and for them an international organization to kind of custody their dollars is preferable to trusting a local custodian. And so for whatever risk that might have, they perceive it, I think in many cases rightly, as less risk than domestic banks for dollar holdings. And then especially for people who you don't have a ton of excess savings. You can't withstand, 30% volatility, 50% volatility on your asset. So a lot of them at the current time, the way the market's structured, need dollars.
Yeah.
So that's why it's outside of Bitcoin, it's one of the few areas that I've been bullish on is the proliferation of stablecoins, because, a lot of them are just used for trading, which I'm not, I don't think that's a very sustainable market overall. But then the actual payments, there's a decent amount of activity there. And so, it's got downsides, but I think it's an important part of the market.
Can you simplify what Taro is? Because that'll essentially enable stablecoins on top of Bitcoin, right?
Yeah, so the funny thing is Tether started on top of Bitcoin on Omni, and eventually it migrated onto other things that were more suitable for it. Taro is a protocol proposed by Lightning Labs that's based on the Taproot soft fork that allows them to put assets on Bitcoin and Lightning. And so if that's successful, the most obvious use case is stablecoins, because in theory the Lightning Network is one of the best places to have stablecoins because it's so fast and cheap compared to even the altcoin undecentralized networks. This one, it runs on Bitcoin base layer, but then you get the speed that's rivals any of the altcoins out there. And so I think that's all else being equal, I'd rather see stablecoins on Bitcoin than elsewhere.
For sure. The Luna situation, I think, it prompted questions about Tether and whether there was going to be a run on the bank with Tether. But some people said that, essentially the network has shown resiliency because people were trying to cash out and they were able to. So any thoughts on Tether?
Well, that shows the difference between a fiat collateralized stablecoin and an algorithmic one. And so I've not been raising warnings about Tether the same way I was raising warnings about Terra. I think that there are still challenges about collateralization, for Tether, because you can think of its stablecoin as being one of two models. If your assets and your liabilities are identical, the same amount, then your assets better be risk-free, because if you lose any percentage of them, you're now underwater. On the other hand, you can have more like a bank model, where you can take some risk with your assets, but then you better have a capital buffer. Like your assets should be bigger than your liabilities, so even if you lose a percentage of them, you don't go below your liabilities. And so we see a lot with USDC, they shifted over to be 100% cash and T-bills, and Tether's kind of moving in that direction, but right now they still have that mix of other collateral, but then we don't know if they have a capital buffer. And so, personally, I would rate Tether below USDC in terms of, say, the assurances that it's a, perfectly one-to-one pegged in all conditions. But I don't have the same kind of total systemic concerns about it the same way that I did with Terra Luna.
What do you think should happen when one of these essentially experiments within crypto fails and people literally lose their life savings?
Well, I think there's a difference between an experiment and something that actively preys on people. I mean, I was talking to someone here from Argentina, and they were saying a lot of Argentinians that don't have a lot of money got caught up in this, right? So they saw 20% yields, and they're like, and not everybody's financially literate. And then there's a trap. I mean, in a lot of markets, because of high inflation, 20% yields are not uncommon.
Right.
Even, of course, 20% yields on dollars should raise some red flags. And so a lot of people just didn't know the difference, and they bought into it. And it's because it was marketed as a stable coin. It was marketed as something that's not speculative, even though anyone who actually understands the technical details understood the risk. Right. But not a lot of people can be expected to. So I think there's a difference between saying, here's a proposal, here's some cool ideas, versus actively pulling people in with purposely artificial yields that are VC funded to try to make it as big as possible. That's different than just an experiment. So I think that has more legal implications because you're preying on people.
Well, I think that a lot of people are looking for that yield because of the situation we're in, because inflation is so high and people are feeling left behind and squeezed in every direction. So let's talk a little bit more about the market sell-off and the bigger macro picture, because your main newsletter focused on the Fed sort of being in this position of trying to tighten because they really need to, but trying not to spark a recession.
Yes.
So can you talk a little bit about what you're seeing right now and where you think this is going to go and maybe how it's going to play out in 3 to 6 months?
So historically, the Fed tries to tighten when inflation's running above their targets and when the economy is doing pretty well. And then if the economy is weak and it's disinflationary, them and then also the fiscal authorities can collectively print money and basically reinflate things and ease monetary conditions. And the challenge to that model is when you have stagflation, which is you have high inflation, but also you have economic indicators weakening. Not the main ones like unemployment yet, because those operate on a lag, but kind of the leading indicators are already weakening. So this is actually a point where they would normally kind of already have been tightening and have now maybe would stop tightening, and they're just starting to tighten.
Yeah.
And if you look back in history, kind of these gigantic regime changes in policy happen when you have inflation, but then due to so much debt in the system, you can't tighten as much as you'd want to, that you maybe need to. And so I think ultimately this is what's going to happen, that they're going to try to tighten until something doesn't work out, something breaks in markets, or we enter a persistent recession, and they're forced to maybe stop tightening even when inflation's still hot. And I think that's kind of the quote-unquote end game of this kind of structural cycle where they're just unable to tighten despite high inflation.
So I've heard you say that before, and some other macro analysts as well, that idea of something breaking in the system. Can you kind of define what that means or offer an example? Like what would break? So
2 examples. One was late 2018, when we had that market sell-off with the Fed tightening. They were talking about being on autopilot. And then there's the famous Powell pivot where they stopped tightening. And that a lot of people thought it's because of the S&P 500 being down 20%, but really it's because credit markets froze. So no junk bonds were issued for 6 weeks in the United States. The whole market just froze. And that's a more serious problem than just stocks being down 20%. And so that kind of forced them to stop, because it was basically the market became illiquid. And so they had to stop. And then less than a year later, in kind of autumn 2019, they had the repo rate spike. So they were still trying. They stopped raising rates. They were already cutting rates by that point, but they were still trying to tighten their balance sheet. They were shrinking their balance sheet, and they had to suddenly reverse course into quantitative easing because basically the banking system ran out of just excess liquidity, and so repo rates spiked. They had to come in and reliquify it, and that's an example of something breaking. So generally, that refers to either a recession forming, or if it's financial markets specifically, it's credit markets, treasury markets, interbank lending markets, something like that just stops functioning and runs into a liquidity problem and seizes up. And then they're forced to basically reliquify it, even though inflation might be hotter than their target.
Are we technically in a bear market?
Well, bear market is generally defined as 20% downturn, which is arbitrary. So, but clearly we are. If you look at, especially under the surface of the indices, I mean, there are stocks down 50, 60, 70, 80, 90% in some cases. And then in addition, if you look at a 60-40 portfolio, like most of these other stock sell-offs in history came with bonds doing pretty well. But this one actually bonds and stocks sold off together. So it actually hit people's kind of diversified holdings as much as a bigger stock sell-off normally would have. So I would say by most standards, yes, we're in a pretty significant bear market here.
In realistic terms, what's the best case scenario with what the Fed is trying to accomplish, and what's the worst case, but in realistic terms?
I think it depends on what timeline you're looking over. I think the best case is that you get kind of what happened after 2001, where you had the dot-com bubble collapse, and then you never really had a severe financial crisis. You just had a recession, and then you kind of continued from there. But I think situation's a lot worse than that now because of how much debt's in the system and because of where we are in the commodity cycle. So I think the more likely outcome is that this decade is going to spend a lot of its time being somewhat stagflationary, where commodity prices are persistently elevated. Now they can cool off for periods of time when we have economic contractions, but I think overall there's just not a lot of investment in oil, gas, copper, nickel, and then when you add geopolitical situations, some of the resources now cut off, or at least they're politically challenging to use now, and so we have to figure out other places to get those resources. And so I think that this whole decade is going to be kind of a struggle to keep getting the commodities we need, and that basically pressures economies and inflation throughout the world.
This episode is also brought to you by one of my favorite companies in the space, Fold. Fold is the easiest and most fun way to earn Bitcoin on everything you do. So if you're interested in Bitcoin, but you really don't know where to start, Fold is the perfect app. There's a daily wheel that you can spin every day for free, and you can earn Bitcoin, free Satoshis. Seriously, there's no catch. And one of my other favorite things is their card, the Fold debit card. You can actually earn Bitcoin back on every single purchase. So make sure to download the Fold app today. There's a referral link in the description.
Getting the commodities we need, and that basically pressures economies and inflation throughout the world.
Some people are predicting a melt up because they say that the Fed always pivots, the Fed has to print. That's the conclusion, everyone sort of has made based on history. Do you think that that's realistic to predict?
I mean, I think you can argue that the melt up was the past couple years, because we had what in some ways was a very, very sharp recession due to the lockdowns and everything, and yet the market went straight up. And that's because of all the record amount of liquidity going into the market. And if you look at most charts, it looks like a melt up. So you can argue that we've already seen the melt up. Now, you could get another one if basically the Fed is forced to ease into an inflationary environment, and other central banks are doing the same. Essentially, what I would kind of point people to look at is what happens in emerging markets during recessions. Because often, if you look at what's happening in their stocks in local currency terms, they're going up because it's rather inflationary, and the unit of account is what's going down. But if you look at their stock market in dollar terms, it's really not great. Same thing is, if you look at Turkey, for example, because inflation's so high, their stocks are actually doing pretty okay in lira terms. And so I think that if you see that kind of thing, maybe to a lesser extreme, happening in developed market currencies, you get kind of the same phenomenon where maybe stocks in nominal terms don't do terrible, but if you price them in something like gold, for example, the chart will look much worse. Or there's a basket of hard goods, maybe a basket of commodities. I think that they are going to perform poorly in that environment, but you can technically have a melt up in fiat currencies if you debase the unit enough.
It's interesting to hear everyone predicting the ultimate put and pivot, because at this point, how does the Fed have any credibility anymore? How do people even trust the system when, if they're going to turn around and just inject liquidity again and ease, then we just keep going up and inflate the bubble further? I mean, the show has to end at some point, right?
Well, I think that's why they're trying to tighten now so aggressively. I mean, this is the first 50 basis point rate hike in like 2 decades. And I think they're trying to regain some of their credibility. And I think that's why they're, even though we're clearly in a downturn by leading indicators, they're still kind of pushing it because it's kind of the last grasp to try to stabilize and try to have some ammo for their next easing. But yeah, I think we're kind of past the point where they have a lot of credibility. I think especially, even not just the Fed, if you look at, Bank of Japan is pegging long duration yields at 0.25%, so yield curve control. And then you have the ECB, which has a problem because different countries have different debt levels. And so, if they try to tighten, then some of the southern European countries, like Italy, with the amount of debt they have and no foreigners want to buy it, are in trouble. And then their spreads blow out. And so all the major central banks have pretty significant, credibility issues around their ability to tighten. Whereas, ironically, if you look at some of the emerging market central banks, Brazil's been tightening for the past year, and they're at double-digit rates because they're taking all the steps they need to try to rein in inflation and try to make their currency, offer yield that's comparable to inflation. Whereas it's the developed market central banks that have been really behind the curve because they're the ones that have so much debt.
Is this actually dropping inflation? Like if they let the equities fall and they keep the narrative going about tightening, could they declare victory? Inflation drops maybe a couple percentage points and then maybe ease off on the gas pedal?
I mean, I think if you cause demand destruction, then you can potentially reduce inflation for a period of time, but then the cost is a recession. And so there is a reverse wealth effect, right? If you damage enough value of stocks, houses, and bonds, some segment of society will spend less, and they'll be more uncertain about business plans. They'll, maybe hire less, get more slack in the unemployment market. And you even have Fed officials say we might have to cause a recession. Some of them have been saying that. And so, what's more politically unpopular, inflation or a recession? So I think that, for periods of time, they can pull back a little bit on inflation by taking some of the excess demand out. But the supply side's still tight.
Right.
So the Fed can't print oil, they can't print chips, and that takes time. And especially in oil markets, we're not really seeing a supply response yet.
Yeah.
And so I think until we basically have abundant commodities again, we're going to be flirting with inflation for off and on for periods of time.
Why is the real estate market still so crazy? I have friends who are in real estate development or sales, and they still have people offering cash way above asking price, and it feels like we're in a much bigger bubble than 2008, but clearly we must not be.
There's a couple factors. One is, even though mortgage rates have gone up sharply, they're still below the inflation rate. And so it depends on someone's assessment of forward inflation, right? If they think inflation is going to come down a lot, maybe those mortgage rates will come down. So I think right now, it's also very zip code dependent. Where I'm based in the Northeast U.S., we don't really see a housing boom. We kind of skipped a lot of that during the whole housing boom this past couple years. And then we're still, whereas other markets had a much sharper rise, basically where people are kind of moving to. And so I think it's zip code dependent, and I think there's still residual, kind of euphoria there. But I think most signs show that at least on a nationwide average, we're kind of leveling off from that sugar high we were in terms of housing.
What else is lagging? Because I know you mentioned unemployment numbers, and I've seen some, headlines online already of companies like Amazon deciding that they're going to end their warehouse leases and maybe contract a little bit. And then I also know that the wheat situation in Ukraine is going to probably have effects on other countries in Africa, potentially spark famines. Where are things lagging that might affect all of this?
So unemployment is pretty lagging as far as the economy is concerned. We're starting to see initial signs of initial claims starting to rise, initial jobless claims. And so we're seeing very early signs of slack in the labor market. But the official unemployment's low. Like a lot of other indicators, that the leading stuff that kind of comes before unemployment has already been flashing, if not red, at least yellow. And so unemployment's kind of slowly starting to maybe wake up to that and maybe start to drift higher. And then when you look at the commodity supply chain, basically oil and gas are the master commodity, and then it trickles to everything else.
Yeah.
So now the cost of running equipment to mine copper is higher. And then the cost of making fertilizer is higher, and therefore the cost of food is higher. And then when you have Russia and Ukraine responsible for a significant portion of the world's wheat exports, that's an issue. And so we see a lot of protectionism among countries, and then you have less efficient distribution of some of those. So basically, I think food inflation follows some of the things we already saw, unfortunately. And so I don't think it'll be a straight line up. I think you can once it gets on magazine covers, which it is now. It's a lot of that's already kind of, I think, priced in. But then you can have pullbacks, then you can have bigger spikes in the future. So I think that this years ahead, I think we're going to have rolling issues where, especially some areas, are a problem in terms of commodities and prices.
Any forecast when it comes to bonds? Because some people think that that's what's going to turn first before the Fed.
So I've actually been in that camp. I think we might be reaching a high in bond yields. But I'm watching for the market to confirm that, right? So it's not like I'd say it's a position loosely held that until we see higher highs, then I would change that. But assuming we don't see higher highs in yields, there's a case that even though the Fed's not done tightening, the market expectations about how much the Fed's going to be able to tighten we might have already hit a peak there. And so I think that they're pivoting from looking at inflation to now looking at inflation as well as economic deceleration in many countries. And they're saying, how much are they going to be able to tighten? And so I think that we might have hit peak tightening expectations, even though we haven't hit peak tightening. And that's something I'm keeping an eye on.
Is it completely unlikely that Bitcoin will reach those all-time high levels again this year or even come near them?
I mean, if you had a total capitulation, like if you had a pivot in Fed policy and a reliquefaction of markets, it's a pretty high volatility asset. So you could have a pretty big swing up. You could retest some highs. But I think that's not the right way to think about it. I think when you look at Bitcoin, it's about what is the probability of where it is 3 to 5 years from now, and decide whether or not you want to have an allocation to it. So I view this as a good place for dollar cost averaging, and I view it as a very uncertain time for trying to forecast 6, 12-month price changes.
Yeah. Have you been impressed by its performance compared to the traditional assets?
It's held up better than a lot of those ARK stocks, for example.
Yeah.
I think people that aren't familiar with its fundamentals, there are a lot of people on say FinTwit and macro people that are like looking at a chart of Bitcoin and they're like, oh yeah, it's about to do like, what Roku did, like, full round trip or stocks like that, Peloton.
Yeah.
And it's like, well, if you dig into the actual what's happening, who's buying it, why they're buying it, what are the fundamentals, I was like, I don't think it's going to capitulate as far as you think, in terms of like what some of these other stocks have done. They were just inherently overvalued. And so I think it has held up better than a lot of those tech stocks. And I think that's probably going to continue, even though, I have no idea if we've actually seen the bottom or not. I mean, we've seen a pretty significant capitulation.
As far as just people who are investing, maybe some of them have the majority of their wealth in Bitcoin, maybe some of them are new, what's the best advice in terms of portfolio investing in this type of environment, which so many people haven't experienced since, the 70s there wasn't high inflation?
I mean, I think everybody's going to have a different approach. Mine is to be diversified, right? Because if you're not over allocated to any one asset, it gives you serenity to kind of just move through the environment. And so a 60-40 portfolio is not great because both broad stocks and bonds are basically, they benefit from disinflation. They want yields going down, they want commodity prices to be low. Whereas I think if you enter a more stagflation or inflationary decade, you want a better mix. So you maybe want equities, but you want more value-oriented healthcare, energy producers, pipelines, things like that. You want commodity exposures, some cash for, capitulation events, rebalancing, things like that. And then I do think that Bitcoin deserves a role in most portfolios. And then how much depends on maybe how many hours they put into understanding it, what their conviction level is, what is their tolerance for volatility. And that can vary dramatically. I mean, some people might want to put 1 or 2% in the Bitcoin. Other people might want to have half their portfolio in Bitcoin.
Yeah.
I think that I'm not going to tell people what to do.
Yeah, but get off zero. All right, to start to wrap up, I feel like I've seen a transformation in folks like you and Michael Saylor between before when you didn't really know about Bitcoin and when you really went down the rabbit hole, and now it's a part of your career to discuss Bitcoin and help educate the public. What does Bitcoin really mean to you?
Well, I think given that we're at the Oslo Freedom Forum, I think the best thing to focus on is the human rights implications. Basically, that it can do things. For example, if Bitcoin didn't exist, I'd be talking probably about gold, right? So that's prior. If you have a stagflationary environment, it's generally those commodities and like the harder monies that hold up well compared to equities or fiat currencies. But now, because we have Bitcoin, we have a competing asset to gold, right? So you can talk about gold and Bitcoin together or competing or however you want to look at it. But then unlike gold, Bitcoin also has a role throughout the world of, peer-to-peer payments. Basically what we've done, or what Satoshi did was, prior to 2009, if I wanted to send money to you long distance, I had to go through an intermediary, a centralized intermediary. And, he basically made it so that, for the first time, there's global peer-to-peer money. And that just kind of changes the rules about how all this works, assuming it gets big enough and widespread enough. And so I think it actually has pretty profound, implications for how the global financial system is structured and what it means for people that historically have not been able to save. Most people in the world can't buy the S&P 500. They can't buy the stock markets that have multi-decade stretches just going up in real terms. they can buy local real estate, which is illiquid, non-fungible. They can try to get their hands on dollars. They can buy the local currency. They can buy some gold, but it's generally just not a lot of options. If you're in weak currency environments or weak areas of rule of law where they can just freeze your bank account or things like that, and this just gives them a tool that I think, the more people are aware of it as an option, the better.
What do you think is the most undervalued quality of Bitcoin?
Probably its payment aspect, right? So it's been pretty well, I think, understood now for its scarcity, the whole 21 million cap. But I think there are still large swaths of people in developed markets that are like, what could Bitcoin possibly solve? Like, I just use PayPal. Like, why do you need Bitcoin? And it's like, people have to go outside of their bubble. I went to Norwegian Parliament yesterday, and we had a number of people from Nigeria with us.
Yep.
And they were telling their stories, and she was saying like my bank account was frozen because I was protesting police violence, and so I had to start using Bitcoin to go around that and keep my finances open. And when people hear that, a lot of people just haven't thought of that. Their mind's blown.
Yeah.
And so I think that's something that more people in developed markets have to understand. And I think it's not surprising that chain analysis is like a crypto adoption index. The top 20 countries, 19 of them are developing countries. And then there's the United States because we're weird. But it's 19 developing countries, and it's because the benefits are more obvious to them. It's much easier to explain to an Argentinian why they might want to hold some Bitcoin or some stable coins compared to trying to convince an American or someone in Norway why they might want to, because we have certain freedoms and certain stability with our currency that a lot of these other countries don't have.
All right, well, Lyn, we are living in crazy times, both in good and bad ways. A lot of people, I think, are a little bit nervous about the sell-off, the price dips, the corrections, the fact that we're in a bear market. So just final takeaways for the folks out there that are kind of shaking about the fact that we might be in crypto winter.
I think, well, one, that's a good time to build, right? So a lot of the things that we see do well in bull markets were built during bear markets, And so I think that's one thing to focus on. And then two, if someone's bullish on the asset, that's a good time to accumulate. A lot of people don't want to buy into the spike high. They want to buy when things are low and chopping along and no one's talking about it. So I think it depends on making sure you have the right time horizon, and then making sure you have the right risk exposure so you're not overexposed to something that you don't fully understand or that you're concerned about the volatility of.
Well, thank you so much. I wish that I had a fortune teller, let me know that it was going to dip this much, because I would have waited maybe on some of my purchases, but it doesn't matter in the end, right? Thanks so much for joining me.
Thanks for having me.